everyone. Hope everyone's been having an amazing time. And today's video, I want to show you guys how you can trade consolidations. Yes, you heard that correctly. Everyone always tells you you can't be trading ranges, you shouldn't be trading consolidations. Well, I'm here to tell you that you definitely can. Okay, you just got to be a little bit careful with it. And the most important thing about trading ranges is knowing what ranges to avoid. Like, as you can see, I'm currently in a trade right now. I'm going to show you exactly how I would have taken a trade like this. Maybe not so much on this example. I'll go to a different example because personally, I don't really like to look at my trades when I'm in them. It just gets my head in a weird way. I start to think, oh, it's winning, oh, it's losing. So let's look at another example. Okay. So the first thing that you guys have to consider and have to know is what exactly defines a range. Okay, so in order for you to trade ranges really effectively, you're going to basically have to identify it at the earliest opportunity. Now, when we see something like this, right, when the market is clearly ranging, okay, we know that it doesn't always move like this. Okay, we know that it could do something like this, right? Here's our little thing. It'll do something. What will probably look more likely is something like this. Do you see what I mean? It doesn't always sort of hit the tops and bottoms. You know, it might come down by here, it might come whatever and do its thing. Okay? But there's two kinds of consolidations that I want you guys to start being aware of. Okay, let me draw this a little bit easier, a little bit clearer. Okay? So give me just a second just to draw this out. Whoa. Okie dokie. So your first kind of consolidation that you're going to see is quite simply just your typical range, okay, which you can see on many different time frames. Most likely going to see it on the lower time frames where you see something like this, okay? But then you also will notice that you'll have some consolidations that kind of look like this. Like it's a big old thing, right? It's pretty big and pretty messy, okay? And that's pretty much it. Okay, so you're going to have to basically identify these two things. Okay, and this is what I like to call, okay, your what on earth? Your minor consolidations and then your major consolidations. Okay, so your minor consolidations are just your typical ranges going up and down, and then your major ranges are pretty much where price is, you know, like smashing loads of different levels and trending within like this whole big move. You usually see this on the higher time frames, where this is what you see on the lower time frames. If I go to my trade, I think it's going to be smashing to the downside. Oh, it's okay. We're still in a little bit. Fine. See, this is why I don't like to look at it, because I'm looking at this data and I'm like, oh no. But it should be fine. It's no big deal. So yeah, so that's the first thing they're going to basically identify, and it should be very simple. You should be able to just bang recognize it straight away. But here's a way that you can quickly identify which one is which. Just simply look at it, take a screenshot of this, and simply just try and apply it. Okay, so let's go to the 4-hour time frame. Okay, we can see that this is looking like a minor consolidation. If we look at that again, let me just go ahead and copy that so that I can paste it. Oh my God, what? I have to, hang on a minute. No, okay, that's just not feasible. Okie dokie. But you get what I'm saying. You can take a screenshot of it, compare it, you know, let's try and look for like a major consolidation. Well, if you look at something like this, okay, this is a major consolidation. You can see you've got your top and your bottom, right? And price is just doing a whole, what on earth? Am I even able to use TradingView today? What is going on, bro? There we go. So you can see that this is a major consolidation. Okay, this would be more of like a minor consolidation. If it can fit into this little box like this, where it's just simply going up and down, it's minor. Okay, but if it's just making trends, breaking levels, but you can clearly see that there is a big range there, then it's a major consolidation. That's the first thing to note. But then you might be asking yourself, damn, like, when do I recognize that the market has started ranging? Okay, so basically the market ranges, it starts at this. Let's say you've got an uptrend, okay, and price comes down by here, right? And let's say it pushes up by there, okay? As soon as it comes back by there, this is where I would define the range has started, okay? And it's what I like to call the 1, 2, 3 pattern, right? Why do we call it the 1, 2, 3 pattern? I'll show you now. Because when price will push, it will need to go 1, 2, and then 3. Okay, does that make sense? If we look at a downtrend, it's the exact opposite analysis. Okay, so price has pushed, it comes back, it goes 1, 2, and then 3. Okay, I'll do that out again. So it falls down, it goes 1, 2, 3. Okay. So how does this identify when the range has started? Let me get rid of those arrows. Okay. Well, essentially, when we're looking at trending markets, what we are basically looking for is for price to make new high highs and new lower lows. So if you are scouting this high by here and you think price is going to make a higher high, if it fails to break and it comes down by here, it would be fair. You could honestly I would take trades by here. Okay, the same opposite is true, but it has to fulfill that 1, 2, 3 pattern. Okay, if it does something like this, okay, let me show you. If it does something like this, right, where price had pushed up and came down, that's not it. It has to be within this box. Okay, I literally want you guys to draw that box out. Okay, so once you've identified the range, what's the next step that you're going to do? Okay, well, it doesn't really matter if price is at this point or if price is traveling back to the resistance level. It doesn't matter what stage the consolidation is in, so long as you have identified that this, right, you've identified the minor consolidation, then you are pretty much good to go. Once you've identified the 1, 2, 3 pattern and you can see that it fits cleanly into this box, it's not breaking above, it's not breaking below, it fits cleanly in that box, you are good to go to take those trades. Okay, so where do you take those trades? Okay, so for minor consolidations, you are only going to be taking trades at the very tops and the very bottoms. Okay, and if you miss the entry down by here and you want to try and get in by there, it's a no-go, right? Because trading consolidations can always be a bit tricky, but when you trade them, you want to get the best risk to reward possible, and you also want to be able to get the best exit possible and the best entry. So you don't want to take any unnecessary risks. So what could also happen is that price will just miss this and then shoot off. Don't get greedy, don't get impatient, just wait for price to do its thing. Now, are there going to be times where price may do something like this, for example? You know, it may do something like this. It may not always look so perfect. Of course it is. Okay, but just by using your own discretion and just by using your own thought processes, you can make a decision where this is something that you want to test out, or you want to take the trade on. So if you want to go and test this whole thing out, then I would suggest you just do it like this. Just look for the patterns that fulfill this criteria, and we'll look at some examples in a little bit. Okay, so what you will basically do once you've identified this is you will go to the 15-minute time frame. Okay, and you will pretty much find the absolute tops and the absolute bottoms. And that is all you're going to be basically doing. Waiting for price to get to those levels, and then you're going to be buying and selling. Whether you want to use a limit order, a stop order, wait for some confirmation, wait for a candle in your favor, wait for a wick rejection, whatever you guys want to do is completely up to you. I personally just enter on the first sign of rejection on the 5-minute time frame, but you guys can do whatever you want it to do. You can just trade on the 1 hour, you could trade on the 5-minute, 15-minute, 1 minute, whatever it is. But so long as it follows this criteria, you will be okay. All right, so when we're looking at major consolidations, what are we essentially doing for those bad boys? Okay, so for major consolidations, it's a little bit different. Okay, I'm not going to draw it as detailed as that. I'm simply going to just do it a little bit jagged so you guys have got an idea. So, something like this. Okay, there we go. Ooh, awesome. Okay. So this, however, needs to be treated a little bit differently. You can still take trades at the tops and bottoms, but you probably might be waiting a very, very long time for price to get there. Okay, what I do is, right, and this works very, very well when you're in consolidating markets. You know, if you want to go back to the early start of this year, look at all this. You can decide not to trade that. Like if people, pardon me, let me put my phone on silent. Sorry about that, guys. You know, if you want to avoid these consolidating markets, then you absolutely can. But if you wanted to trade them, and you know, you can definitely go and test this out. So once you've identified a major consolidation, like I said, you're usually going to find this on the higher time frames. On the lower time frames, you're not really going to see it so much because that will be represented in a minor consolidation on the higher time frames. Does that make sense? So if you see something like this, where you know this is a big range, okay, you've identified this as a minor consolidation, you want to go to the 15-minute, okay, you're kind of seeing it there. You're kind of seeing a major consolidation, right? So it's what I'm about to tell you with the major consolidations only really works that I found on the higher time frame. So like the 1 hour or absolute the 1 hour time frame works best in my opinion. But you can also use this for the 1 hour, the 4 hour as well, or the daily. All right, but just make sure you're testing this out for yourself, guys. Okay. So without further ado, let's get back into it. So with this, what you are essentially going to be looking out for are simply wherever price is. Okay, let's just delete some of these lines. Okay, let's say we are by here. Okay, and you come to Monday morning, right? And we see price is just pushed a little bit. Okay, what are we basically going to be doing? Well, what we have to do is basically look for any recent levels, okay, using the brick wall theory, which to be fair is something I'll go over in a lot more detail. And I should do this quickly because I mentioned it quite a lot. Using the brick wall theory, which pretty much is you simply go on the right side, okay, so bear with me on this one. Wherever price is, you look to the left. Wherever price is to the left, you are keeping to the right side, okay, so you are simply just going to be scanning up by here. Okay, if I was to look at this chart, okay, if we were by here, for example, right, if we just imagine that this little bit by here is just down by there, what are we looking out for? Okay, we are looking to the left. However, we're looking at price on the left, okay, but we are keeping to the right side of the candles, and we are just going left, scanning, boom, until we get a high. Okay, we keep on scanning, boom, we get a high. Okay, so you keep on doing that, right? You mark out all these levels. So you go to the left, you mark out by here. You see how we're not marking these lows. We're just looking at we're not marking these levels, not marking this level. We're simply going back by here and just scanning on the right side of the candles. Okay, so you mark out those levels. Now, what will also happen is, okay, you could have something like this, right? Where come on Monday morning, prices come up, okay, and it has come down, okay, and it's, and it's doing something like this, okay. So what you need to do is, again, we're going using the brick wall theory, we're marking our recent levels, okay. So we're not marking levels that have happened 2 days ago, 3 days ago, we're marking our recent levels. So that also goes for our current levels. So there's a high by here, okay. There is a low by here, right? So you go ahead and mark out all those key levels. And then what you are simply doing is waiting for price to get into one of those levels. And you are simply waiting for a rejection of that level. All right. Like, bear in mind, I haven't talked about any retests. Okay. Retests do not work, in my opinion, in consolidating markets. Okay. Maybe you guys will have success in them, but I've just found more often than not, it's just a bit sticky. Okay. So with your majors, you go and find, and typically this will be on the higher time frames. You will find your recent levels, wait for price to reject, right? Maybe it gives you like a candle that you're looking for. For example, if you're buying, you may want to see a bullish candle by here, or you may simply want to see some kind of rejection. Once you do that, then you can scale to the lower time frames and you can take your trades. But you always have to be wary of the current levels of price, okay? Because you want to be exiting these trades, right, around where the recent levels are. That's why it's so important to be, making sure you know where you are in terms of price structure, because you want to be taking trades when price has rejected a zone, but you also really want to be exiting trades where price has a likelihood of, again, reacting to a zone. Because ranging markets are completely different to trending markets. You have to be treating them just a little bit differently. Okay, so with that in mind, let's go ahead and look at some real life examples. Hell, let's go and look at the trade that I put on right now. Okay, so bear in mind, it's kind of doing its thing right now, but I still believe in this trade. I've taken many trades like this and I found a lot of success with them. So it's just about how you guys want to sort of approach it. So with this, okay, I was able to identify that this was turning into a minor consolidation. Okay, so if we're looking at price by here, okay, we are simply going to just draw a line, and this is going to represent this high. Okay, this high by there. Okay, when price pulled back, right, by there, which is this level by here, okay, I thought to myself now, okay, price is either going to make a higher high or it's going to reject this level. Okay, so once it pushed up and rejected that level, okay, following the 1, 2, 3 pattern, 1, 2, as soon as it comes back down, this is the 3, okay, then I can look to take trades. So what I said was, you go to the 15-minute time frame, okay, and you go to the tops and bottoms, right? So this was very easy to trade, very easy to decipher. So I simply drew this zone out, as I always explain, from the wicks to the bodies, go to the 5-minute time frame, I wait for some kind of rejection, and boom, I enter. I've set my TP quite high, to be honest, so depending on how I feel, I might exit the trade, but that is simply it. Okay, let's look at another example, all right? Another trade I remember taking was down by here. Okay, the exact same approach, right? We can see that price has pushed up, okay, right? It's pushed up, it's gone 1, 2, 3, okay? We mark out, we've already should be marking out our levels anyway, okay? We go to the 15-minute time frame, right? We adjust a little bit, okay, and what are we doing? We're waiting for price to enter. On the 5-minute, wait for some kind of rejection, which was down by here. You can see we got that rejection wick by there. So I will put my stop loss a bit below the wick. Let's have a look and see. Okie dokie. Bear with. Let's extend that just a little bit more. Okay. I'll be looking where my target is. Okay, so using the brick wall theory, this looks like an area that I could exit. So I'll probably put my TP around by here. Can I get 1 to 3 by there? Absolutely I can. And then boom ski. Okay, but if you guys wanted to, you guys can take this on the 1-minute time frame. You guys could have entered just using a stop order, right? You could have maybe taken out your profits by there. This is why I'm saying you guys go ahead and test this out for yourself. Now, let's look at some examples of major consolidations, okay? So we can see by here, right? We can see by here that, well, I recognize by here that this was looking, when I woke up in the morning, and I saw this, I could just see that this looks like a major consolidation. Why? Because you can see that price is failing to break by here. We can see that price is not trending. So if price isn't trending, what is it doing? It's ranging. So we can clearly see that it's ranging, right? And when I woke up in the morning, okay, where was 6 a.m.? Oops, daisy. Oh, we're already at 6 a.m. Okay. So yeah, so this would have been 6 a.m. Okay. And I'm thinking, right, using the brick wall theory, let's go to the left. Okay, we're not going underneath, we're not going by here. We're simply sticking to the right side of the candles, but moving to the left side. Okay, where is our most recent level? Right by here. Okay, so what am I doing? I'm waiting for some kind of rejection. I can see the price has rejected that, as I already said. When you have major consolidations, they usually appear on the higher time frame. So you look for the rejection of the recent levels, the recent highs, or the recent lows. And what you are doing then is taking trades on your lower time frame. So I could see that price was failing to break past this level. So what did I do? I simply waited for price to enter the level, reject it, right? Which is pretty much exactly how I take all of my trades. Okay. I wouldn't have got triggered by there, as you can see, if I wanted to trade off that candle. So I can see that this candle gives me a little bit better risk to reward. So that goes down by there. That's a boomski, right? Now, let's see. So this is where my discretion comes into play, okay? I look at my exit target. Well, I look at my exit and I can see I've got all this room by here, but price could literally tap in by here and then it could just fly up. So I set my TP by there, but once price got in around this level, okay, I simply just closed out my trade. I was like, I'll take 2.5 hour. I don't mind that. It's fine. Let's keep it pushing. But you can see that it closed for 3R. Okay, let's go and look at some more examples of major consolidations. Here is another example of minor consolidations. We can see it happening time and time again. Simply, what pattern have we got? Prices, broken this level, downtrend, pushes down, right? It goes 1, 2, 3. At this point, it's a range. You can trade down by there. Simple stuff. Let's look at some more major consolidations. I'll do one more major, okay? Here we go. I remember this trade. This was a nice one. Okay, so I could see this is a major consolidation, right? You can just see, right? Remember, guys, when price isn't trending, it's ranging. Give me a second. My phone is going off the heezy again. Off the heezy. Who do I think I am? I can feel it vibrating on my leg. Right, so come Monday, what was it? Friday morning, afternoon, whatever it was, I noticed that this was a key level. Okay, so I'm thinking, could I trade off this potentially? I don't know. Was I able to get an entry? I don't think I was, right? Yeah, I wasn't able to get an entry. So I'm thinking, what's the next opportunity right now? We're in a major consolidation. We're going to use the brick wall theory and go to the left, keeping to the right side of the candles, making note of our first high, okay? Boom, by here. Okay, so now I'm waiting for price to come in and reject it. Oh, what the hell? Okay, so price came in, okay? Gave this little rejection, right? Even though it's a bit of a strong push, I definitely traded this, but if you guys wanted to wait for the bearish candle that followed, you guys can absolutely do that. So now what am I waiting for? Okay, well, I need to kind of see the 5-minute shift a little bit. I can see that it's failed to break by here, but it's just pushed up like this. I want to see something, okay? I want to see price giving me some kind of a signal that the bears are stepping in. And with this break below by here of this level, I get it, right? So now I'm thinking, okay, I can enter with a nice little retest of this level, or I can go ahead and enter on a double top by there, okay? So price has come. Where is price? Oh, hang on a minute. Let's see if I could have taken a trade by here. If I can get 6 pips below that level. No. Okay. Okie dokie. Cool. So I can see that price has pretty much reacted to this level, and I'm going to go ahead and take the retest by there. Lovely jubbly. Okay. Let's see what target. Let's see what risk reward we can get. Can we get 1 to 3 beforehand? Absolutely. And let's go for it. Fantastic. Okay, so that is it, guys, right? If you follow what I've told you there and test it for yourself, you are going to find a great deal of success. But does this always work? No, it doesn't. Is it going to give you guaranteed success every time you trade consolidations? No, it doesn't. But does it mean that you now have some kind of a tool to help you improve your arsenal and be able to take more trades than you probably would have? Absolutely. And is it going to work for you? I don't know. But if you study what I'm telling you and you find something that works for you, then you've done yourself a great service. Okay, so you've got more things to trade, and as long as you do it in a safe and proper manner, there's nothing wrong with that, right? All right, guys. So I'm gonna log off. If you guys got any questions, shoot me in the comments or shoot me an inbox, whatever it is. It was an absolute pleasure to teach you this concept, guys. Have a great day, and I'll see you in the next video. Take care.